Well, hello, folks, and good morning, party people. This is Top Gun here for you this morning, and I got a good one for you, folks. I decided that without Googling anything and without doing any research, as valuations are a pretty confusing subject for people, I'm going to try to explain them because I'm going to guess how they work. Yeah, have a little bit of fun with that. Well, basically, I'm going to shoot some numbers at you and give you an idea of what a valuation is. What you would look at, I don't know specifically. So this is my understanding. Why are valuations in the stock market so important? And why do people say, well, I can't sink my teeth into crypto because there's no valuations? Well, let's have a look. Let's try and explain this for you. Let's do it on a blank sheet. Let's have some fun. We're gonna have some hypotheticals here. Apple, Tesla. All right. So you hear about market caps. I wonder if I can actually find the market cap for Apple and Tesla. Probably. Let's Google it. All right. Tesla market cap. All right. Market cap. 7.78 billion at $763. That's important stuff. So Tesla, 763, and that was 778. I believe we're gonna round. Okay, yeah, 778. Let's do the same thing for Apple. Okay, 145. $145. This, I guess, should have a few more zeros behind it, shouldn't it, folks? That would make it million. Oh, there's the billion. Perfect, right? Continuing along on this merry band way, Apple, 2.35 trillion. Lower price, bigger market cap. What does that mean? Well, we're going to look and try and actually explain this a little bit. So, sorry, that was 2.35. 2350. 000. 000. 000. Oh, look at that. 2 trillion. And just to make sure that our lives stay a little bit easy, we're going to use number. Then we can actually see the commas. We know that we're doing this right. Okay, so we have a price, we have a market cap. All right. So what this tells us is we can find out the exact number of shares. How can we do that? We take the market cap and we divide it by that price. Now we know the full number of shares. You know what? Let's autofill that. Now we know the full number of shares there too. What would be really handy? Some commas, because those are larger numbers. Okay. All right. So we can tell that we have 1 billion shares of Tesla and 16 billion shares of Apple. Interesting. So now we've got Apple's market cap and Tesla's market cap. And we know how many shares are pretty much in existence because of that market cap. Okay. So I'm not going to go into liquidity. So if, let's do it. Let's actually go into liquidity. Let's say that there was $100 million in liquidity for both of these. And people go, why does market cap matter against liquidity? So here's an average exit, okay? People are like, what the heck's that? If you take the amount in the liquidity pool, and we're going to say it's the same for each. We're going to say it's $1 million. Just for fun. Well, no. Let's give it 100 million. Otherwise, it'll look really too scary. Okay. 100 million. We're going to do it to both of these. Say they both have the same liquidity, but one has a bigger market cap. Why would that matter? Well, something that will never ever happen, but let's assume that it would. If we take the amount of money in there and we divide it by the number of the number of shares in market supply. Oh, what is this? If everyone sold all at once with the same amount of liquidity for Apple and Tesla with these numbers, well, everyone in Apple would get 6 cents a share. But everyone in Tesla, I used $1 billion, would get 98 cents a share at 1 billion and 1 billion for these. So that's a different cash out rate. Now, not everyone is selling at the same time, but that's why liquidity matters. Okay? So again, let's actually label these for anyone tuning in late, because you guys love to do that and not watch the whole thing. Yeah. Number of shares, which would be the same as circulating supply for tokens. Liquidity available for withdrawal. This is just an average cash out per. If everyone went all at once at the same time, what would they get? Okay. So that's liquidity, but we want valuations. So what does that matter? Okay. Apple, year revenue. Okay. $365 billion US for Apple. 365 000 000 000. There we go. We've got our 365 billion. Again, it'd be nice if we just got our commas right away, right? Put this in here, early there. Now let's do the same for Tesla. There we go. 53 billion. Isn't that handy? All right. Annual sales revenue for 2021, 53 billion. Okay. Such a smaller market cap. Okay, smaller revenue, smaller market cap. Like, look, this is kind of like starting to be a little scary here. This is the revenue. Apple looks great, doesn't it? I mean, it's got a large market cap. We don't know how much liquidity there is, so let's put a question mark. I just had a little fun with that. That was for example. Or we see this revenue. So this is interesting. Now, here's the idea with a valuation. What should a company be worth? Now, I have a simple way to look at whether a company is undervalued or overvalued. We have the year revenue and we have the market cap. What happens if we take the market cap that we have and we divide it by the revenue? If this number is 1 or above, we're really healthy. And we might even be undervalued. Or sorry, if it's under under 1. The revenue can outbuy the market cap. There is more revenue in a year than there is a market cap. Is that what that looks like? That's what that looks like. Which means Apple, with its yearly revenue, could buy its entire market cap and then some. So we're going to rinse and repeat this. All right, we're going to take the market cap and we are going to divide it by the revenue, and we should hopefully get a number smaller than 1. 14. So what this tells us is how many years it would take it to buy up its market cap. Apple can buy up their market cap in 2/3 of a year. Tesla would take almost 15 years to buy up their market cap with their revenue. Holy crap, are they overvalued? They couldn't even buy their own stock at that rate. Who's going to buy their stock at that rate? Apple can buy that stock at that rate for themselves, So this is where liquidity, like I skipped over that for mattering. Like we talk about low liquidity, large liquidity. I haven't gone into slippage really, like issues, why Richard Hart's low liquidity is great for price, bad for slippage, this kind of thing for average cash out. Not touching it right now. But valuations is the point of this. Revenue, and then how many years would it take it to buy up its market cap? How many years? Wow. So the faster it can buy up its market cap, the better valued it is. The slower or longer it takes to buy up its market cap. All right, you kind of hopefully getting this. This kind of makes some sense to you, simplifying stuff. So crypto doesn't have valuations. I can't get into it. Oh man, well that sucks. What if we look at Uniswap, and we look at OpenSea, and we look at online casinos? Why would I do this? Why would I be doing this for crypto? Well, Uniswap is DEX. Okay, so what we're gonna drive home here is the fact that Uniswap has a revenue. They do $2 billion a day in volume. That's $730 billion a year. So 1% of that is $7.3 billion a year. Why is that important? Uniswap charges 0.3% of that volume, 1/3% for the transactions. 1/3 of 7.3 billion, roughly 2 billion. We're going to round down a little bit because we know that it's not 3.3%, it's 3. So 2 billion. So wait a minute. We actually were able to figure out that we have a revenue. It's not as impressive as Apple, but it's competing with Tesla for a DEX. OpenSea. Well, OpenSea does literally 1/10 of the business for volume that Uniswap does. But funny enough, we go down to that 1% and do all that math. They don't charge 1/3%. They charge 3%. So what does their revenue per year end up looking like? Oh, that's funny. That's funny. Now, online casinos, the best that I could find, not very handy. $73,000 a year for revenue. But that's revenue. These are valuations. So what if we had some fun here? Change this to pulseX. And we change this to Mintra. And we change this to free pulse. Oh, I'm going somewhere with this, folks. Isn't that getting cool? So we know the number of shares circulating for these, although they don't have prices. Okay, so 17,200,000,000. There we go. Oh yeah, we'll change that afterwards. Mintra now. I believe Mintra was able to get about $10 million, roughly, at 100 coins per. So I'm being a real bastard on this. I haven't calculated their circulating supply exactly. But 10 million, that would say 1 billion. And I believe with the bonuses and everything, it was about 2 billion. 1, 2, 3. 1, 2, 3. 1, 2, 3. Oh, that's right. That's right. 1, 2, 3. Ugh. Man, that is such a large circulating supply. Hey. So large. It's alright. The buy and burns will work great. Okay. And Free Pulse is having a fixed supply, which makes it simple. 777, 777, 7, I believe. 77 million, I think. A bunch of sevens. I'd be really cute on that, but I lose track. I think it's 77 million. So, okay. We have numbers of shares. We have revenue. So how many years to buy it up? As in, how much? Well, we want to figure out what should the market cap be and what should the price be. Let's go backwards on this. So if we want this to be 1 and 1 and 1, ideally, 1 year, we'll just say, well, then that's pretty simple. If we times this number by this number, we'll get this number. So we're going to go in this direction. This will equal this shift times this. Well, that's interesting how we're doing this math, isn't it, folks? You guys are like, why? Why are you doing this to me? We're not awake yet. This is the morning. Well, education never waits. There's always times to learn. So we look at what the ideal market caps would be of these things. Then we can do another cool little trick. Well, if we divided the market cap by the price, we got the number of shares. Okay. All right. So if we take the market cap right here and we divide it by the number of shares right there, let's go ahead and drag this down. Well, since we know the number of shares and we know the revenue, then we have a basis for a healthy market cap, in my opinion. So yeah, these are supposed to be dollar amounts, and they'll need some more zeros. So there, 3 decimal places. Wow. That's funny how that works, isn't it? The projected market cap for pulseX is about that day one SAC price for the amount of tokens that were. Mintra, oh, isn't that a nice? They can actually go up to $1 and support their market cap with their revenue, according to these kind of things. And Free Pulse, oh, a good deal. Look, 1/10 of a cent basically, 10 times the deal of pulseX. Ooh, this is scary numbers. You getting scared yet? Probably a little bit, but why do these matter more than Apple and Tesla? Why have I been going on about this thing called buyback and burn? So Apple, with this revenue, occasionally will buy some shares, and then when the price really goes up and a lot of retail investors have come in, they'll sell those shares, make even more revenue, and rain on your head. All right, so they never keep them off the market. They'll never buy it up. That's why the valuation is kind of a joke. Who cares if they can buy it all in a year? They never will. They'll go bankrupt before that happens. What a vanity metric. However, with a buyback and burn, interesting. We got to add another field. So with pulseX, we know that the buyback and burn is times 21%. Funny enough, for Mintra, I believe Mintra is using more of 1/3. So Mintra will equal this times, I'll put the right pin, 0.333. Ooh, so they have actually even a stronger buyback and burn. Now, Free Pulse may do better than other online casinos, but still, let's give them their chance. They are doing, I think, a 50% buyback and burn, which is nice. All right. So this is the actual number of dollars or value they have committed to buying back their stock. This is the number per year that they are committed to giving back to their investors for all eternity. $0. Now with the buyback and burns, well, that means they are actively purchasing their stuff off of the market. So then the question is, how many years at these rates will it take to get off the market? That's all it is. There is always a buying, taking it off the market occurring. That's why the buyback and burn is so important. It actually links valuation, how quickly you could buy this stuff, to actually doing it, buying it, but on a slow percentage curve. How quickly will it buy? And that depends on the price. Like the buyback and burn rate will shift. But like if the price didn't go from these, like this is fun where this is not what it's actually going to be. Here, let's replay with the numbers. We're all waiting and hoping that Pulse will get to $1. We're hoping that Mintra will get to $10. I'm sure Free Pulse would love to get to $1. Okay. Well, we know that the market caps, the number of shares don't change. I hope if I don't just steal it out, right? Okay. Well, then this math gets pretty easy. Column A times column C, well, D, but you get the point. Yes, autofill. Okay. So now we've got these market caps, these projected market caps, ginormous, insane market caps. Okay. And then we still have our revenue. We have the actual amount, though, that's being purchased into it. So we like these numbers. Let's copy these numbers. Oh, yeah, these were all figured out. Okay. Fine. Do it this way. Excel. There, now I've got my numbers. So we want to know how many years would it take to buy up, right? Well, this is the amount going in. So this will equal this number divided by this number. How quickly can it do it? Alright, so for valuation at these prices with this amount of revenue, this is not actually tracking the liquidity pools the way I'd like to be precise, but yeah, pulseX. If the market cap were 17 trillion, if it were $1, and all of those were still in circulating supply when it got to $1, and the revenue had not gone up and everything, yeah, that is 40,000 years at its revenue mark. However, interestingly enough, Mintra is 30 years. Free Pulse, 2,100 years. Okay, so this gives you a rate that they're buying their shares off the market, so there'll never be any more. 30. 30. Did I see 30? They're trying to participate to actually clean all their stuff off in 30 years? That one was Mintra. Okay, this one's pulseX. And this one is Free Pulse. Okay, so Free Pulse is going to bring a faucet. That's great. Mintra is going to... I don't need to put .ios in here. Mintra is bringing an NFT marketplace. And pulseX is the DEX. We have revenues. We have actual valuations we can calculate. And we've got impacts of buy and burn. This is why crypto is finally making the venture over to real traditional investable assets that you can sink your teeth into. Did this help shine a light as to why I think the buyback and burn is so important? And although I am a Richard Hart maximalist because he does things great, he sliced bread, he was just the first one to slice bread and do an innovation. If people hop in behind him and do it just as well, I might be just as impressed. Gerardo. Really loving these tokenomics. Really loving the way this stuff balances out. So if anyone has any problem with my way of evaluating a company and whether it's worth buying its stock, please let me know in the comments. I would love to hear how I messed up this math. For everyone else, I hope this gives you an idea where to start trying to judge, is this a good asset to invest in? DeFi! Is there revenue? You can't sink your teeth into valuations. There's no revenue. There's no revenue. Hex is DeFi. But Hex, thanks to Hart's Law, will be paired with assets like Mintra and pulseX that have revenue. And because of Hart's Law, that'll make the commodity of Hex go up because of these stocks being paired with a commodity. Imagine if you could trade commodities for stocks instead of just currency in dollars. Well, you can in crypto, in Pulse Chain. Pulse Chain a coming. I am not a financial advisor. The Pulse Chain is trying to change the way things are done. This is important. This is good. I hope you enjoyed my thoughts on this matter today. And I hope you enjoy all the content I keep trying to bring you guys. I constantly just want to give you more ways to look at the investment opportunities coming when we've got a market in so much pain and distress. The dollar again surges. The market cripples and bows this morning. Big tech's getting a hit again. Netflix already got beat so bad it's only got up to go for this dead cat bounce area. And our main lead indicator, oil, still on the top side of the bull flag I had. And we even are changing shapes on this thing at this point. We're starting, well, we broke out of it, so this doesn't even matter. We can just delete. Once we get out of the resistance, there's every chance we can go back up for more. As long as oil goes up, inflation is strong. As long as inflation is strong, then the dollar sucks. And the markets are doing all right. The dollar needs to be good. The markets need to come down, and so does oil. So right now we're feeling the pain in crypto. However, as always, I love Hex. Still in our bull market trend. Hurrah, hooray, ha ha. You guys know I love looking out here. I am. Well, Nomics is a good site to watch it too. Can't do it from TradingView yet. So, yeah. I hope you enjoyed doing some more math today. And later back, I should name this, because we'll come back. Actually, why am I even done? Let's finish this off. Let's finish the lesson. You guys up for more learning? You're still here, aren't you? Okay. Alright. So let's go back to Google and let's see Tesla available liquidity. Liquidity ratios. I think that's what we want. Oh wait, there was a quick one? Alright, quick ratio is 0.59. Lack of ability to cover short-term cash needs. Ooh, the ratio. I'm not sure how they figured out the ratio. I want to make my own ratios. I want to know the base liquidity. Dang it. Alright, back to where I was looking. Okay. Quick ratio, current ratio, cash ratio. I want the cash ratio. Cash ratio of liquidity. Still, no, I'm not sure how they do this ratio. I want to know how much cash is in there. I want to calculate this ratio myself. I don't trust anyone. Tell me how much cash, current assets, financial data, liquidity ratio. Oh, this liquidity might be their liquidity. Yeah, this is their. Oh, accounting. I was an accountant. I should know what I'm looking at. This isn't the market information. This is their liquidity. All right, let's see how I'm going to phrase this. Okay. Bum-ba-dum. Hopefully this will give me what I'm looking for. Illusory. Ooh. Alright. Suggested 11 billion of liquidity. Okay. Dig into the 10K though, and the number shrinks to 5.7. Don't know what that means exactly at the moment, but I can show you some numbers. So, Tesla, 11 billion. Bam. Alright, average cash out per share. So if that's actually what's available in the liquidity, that's actually a pretty good cash out per share. If everyone panicked and flew now, instead of being worth 700, it'd still be worth $10 a share, basically. It's not the market cap flooding out, but the number of shares coming out of here. So let's look at Apple's. Okay. Apple. I want to know about the trading. I want to know about the liquidity that is available in the market. Lots of numbers here. 2 trillion valuation just over 2 years ago. Maybe I'm doing valuations a little more properly. This is not the website I want. What is Apple's cash per share? That's what I'm trying to calculate. Alright, I can take cash per share. Cash per share. No, I don't think this is what I'm looking for. I want to actually be like, if I'm going to withdraw money from the stock markets, like what liquidity is in there. How much liquidity is paired with Apple stock? Let's get more precise. Like, why was that? I don't want their cash reserves. I want the amount in the market. Okay, well, you know what? Let's just... This is too annoying. Let's just, now that we've got this number, Control C, Control V. What if they had the same amount of liquidity available? Alright, if they had the exact same amount of liquidity, well, then, wow, that's actually the number of shares, yeah. So yeah, in this case, Tesla is more healthy for liquidity than Apple, which is why I would assume Apple might have 10 times the liquidity available. Who knows? Maybe even 20 times the liquidity available. I can't find it on Google easily. But that gives you an average cash per share if you were going to climb out of the market screaming and kicking. So where would this matter? Well, with pulseX, at this low price when it starts, I've noticed there was 500 million available in liquidity at some points. So let's go ahead and work with that number. Bam. Like our numbers. So if this is the liquidity, divided by total number circulating supply shares, there's our average. Wait, I'm doing this stuff wrong, right? No, yeah, I'm doing this right. EDK. So yeah, average cash out per, if that's the liquidity available, would be, yeah, it's always going to be lower than the actual share price. When the share price gets higher, the liquidity gets higher, this cash out ratio will get higher. Okay, so now we've taken a look at some things here, giving you some ideas, some math, how to calculate. Is it a good deal or is it a bad deal? Do I want to Warren Buffett this? So, again, give Mintra a little bit of love here. Valuations in Mintra. But we don't want .com. Oh, no. We want .io. Oh, yes. Yes, we do. Mintra.io. Oh, wait, that's right. That's not the test page. What was the interface? What was the interface? I had that. Yes, you guys can see my whole chat history because I'm in suddenly the feeling dumb moment of my show that I won't edit out. There we go, Mintra. And we want there we go, sacrifice contract, trading, pulseX, staking, pulseX mint. Here we go, mint staking, connect wallet. My lovely dummy wallet I've been using for testnet that no one has wanted to hack, which I'm impressed about. And here we go, some metrics. These are not what's really happening, but it's an idea of what might happen. This is the testnet, giving you an idea of APY, because it's going to pay dividends at Pulse. It's going to do buyback and burn. I may have had some staking for a while, and I may have earned, what is this? 51,000 Pulse. It's not a lot for small fries right now, but when it's worth $1 or more per, That's a good chunk of change. For somebody that missed the pulse sacrifice, looks like I got $5 in on the pulse sacrifice all of a sudden, just for staking my Mintra for a few weeks. And I already claimed 5,000. Yeah, 50 cents worth on that day of one sacrifice. So, yeah, loving Mintra. I'm loving valuations. I'm loving ways to calculate things. Like, really, Mintra ended up being, I think, the little one that got underestimated that could. And I am so excited and so happy to be a shark in Mintra. Gerardo, gotta say, there's really good numbers to pick, non-excessive. Great for valuations. Something that I think people can sink their teeth into for valuations. That's my thoughts, folks. You've tuned in, you've heard a little bit of the market, you've heard valuations, and you've heard me pump Mintra again. I know, talking about all these things that aren't Richard Hart. Get over it. Richard Hart designs it best, but if someone is going to design it the way he's building it, it'd be kind of dumb to ignore them if they're willing to build it just as good. Or even try to do it better and make Richard Hart up his game. That's what healthy competition in the markets is all about. Alright, so I am not a financial advisor. You should never buy anything or sell anything based on what I tell you. I will tell you what I am doing in the market. If you choose to do what I do, you do so at your own peril, because I may not always be able to update you on what I do in the market. Get the heck out of Luna if you're still in it. It is in its final death spirals. Yeah, and so is USDT. I don't feel like zooming in to even show that this was 3 zeros and a 3, then 3 zeros and 2, 3 zeros and a 1. It is dying off. There's no more pump coming. Same with UST. These shouldn't even be on the market. It is disgusting. Get out, get out, get out. The whole crypto market's just going to be a little bit pain today. I will stay at you with what's coming in the news and the events this week. Anything positive we have to look out for that might kick the NASDAQ up, which might kick Bitcoin in the nose and get everything pumping up. Because NASDAQ and Bitcoin are both a little bit speculative of futures for what things could be worth. And because of that, they're a little more volatile. And they do seem to play well with each other, the NASDAQ and the Bitcoin. So, although there may not want to be seen connections in the market, there are. Oh, there are. And you can start to track and anticipate why Bitcoin made the movement it made. Not with as many valuation technicals as a stock, but with the same speculation that commodities have, the same way you might bet on the value of gold, because Bitcoin is just digital gold as a commodity. It's not money, it's not a stock. It's different. You know the difference between commodities and stocks and futures. These things exist within classification groups for crypto as well. People just aren't putting them in these groups. They exist for good reason. Okay? So, yeah, that's my thoughts for you today. Can't wait for Pulse Chain to launch. Oh, let's talk about it just a little. Poor Mr. Hart. Okay? We're going to get rid of the Mintra stuff. Don't need that. Don't need Tesla. Nope. Alright. I'm going to do that later. Okay. So, Richard Hart's got a situation right now where a couple investors are getting cranky. Everyone's getting cranky. It's coming. Pulse Chain's coming. And Richard, I'm not picking on you if you're listening to this. I respect what you're doing, believe in it. But the agitation of saying, 2 more months but software's hard, like, really, that is a goading along where you've lost all credibility on timescales. That's not great to do to yourself. To say when the pulseX sacrificed 2 years and surprise us with 1 year would have been great expectations. You might have gone through the hype cycle just a little too far. You could have started hyping early when that came. But that's nitpick. I couldn't have done this any better. I couldn't have built this. You're doing great. People will complain. So, are you a little bit of excessive sometimes? Yeah, it gets attention. It gets clicks. It gets you out there because it's very hard to market. So, being obnoxious is a good way to get heard. But you've been heard. You've been heard for a minute. You got 250,000 followers, basically, that are hearing you and repeating what you're saying. Wouldn't it be a good idea to continue saying the best of the things that you say, so they're hopefully repeating that? You might lose some followers, but you're moving from the getting noticed and having people have to deal with you phase to trying to build something in the real world. I don't know. Like, at this point, if you really want to do a free port and you got to play some politics, you may have to change the opinion rates, and that sucks. And on the other hand, that might lose people. Like, you can't. Here it is, Stoic quote: a man who is a friend to everyone is a friend to no one. You can't please everyone. You can't make everyone happy. Pick a path. Stick with it. Really, if you trust in yourself and you know yourself, you will do what you're best at, and you will excel at it. Stick to it. And that's where Richard Hart is a funny man, because he is humble. He does have humility. Like, as somebody who's on the spectrum, it's very important to me to try and lock onto emotional cues. And the way that he emotes during certain parts, when he actually realizes there's this pit that happens in his heart, he actually seems like he has a mono anxiety that no one will hear him, that he's just not going to be heard, because he has something so important to say. And in those moments, all of a sudden, it's usually a plea to us to do something better with our lives. That's a man that cares. He almost dies of anxiety trying to get us to better ourselves. Who cares about all the Louis Vuitton and all that? I can see past it. I see what's in there. I'm good with whatever he chooses to do. But to rag on a guy that's making you rich and trying to continue making you rich and getting around every bloody obstacle thrown in his way, and then because you're a little impatient and a little cranky that it hasn't launched yet, and you feel like he's alienating your investors, well, he's not Charlie Sheen absolutely winning, drinking all your investment money in tiger blood. He's just trying to get noticed when crypto can't be advertised. Cool. Should we cut the man some slack for doing an amazing job and maybe making a couple mistakes on the way, pissing a couple people off? Sure, I'm having nightmares about pterodactyl porn still. Can't get it out of my head. No idea why the girls would make the pterodactyl noise. Could have gone my entire life without hearing that. It's in there. I'm stuck with it. I might be sending my therapist bills to Richard Hart directly, but hey, got him views, got promoted, got out there, and we need to have people know about this. The gatekeeping kills us. So I put my trust in Richard Hart that he can do what he's going to do, and it's going to turn out good. And if you have put your trust in him in the past of that, wake up, start trusting him again. Okay? I know, we're all frustrated. It's at the finish line. I'm going broke. Cops have been raiding my place. You don't think I want to live there here and I'm angry? Yeah. But can I still stay optimistic knowing that the future is looking bright, and every extra day that I wait is a little extra secure and stable and more reliable that future I've invested in could be? And as this is my biggest play to change my life and get out of the hellhole I've been in, is that important to me? Yes. So can I wait? Yes. And will I happily let Richard Hart alienate everyone, including even me? Yes. Because in the end, I'm going to make money off Ball's chain. I don't know about you. Alright, I think I've said all my thoughts today. Valuations and a whole wander. Hope you've enjoyed the content. And until next time, stay frosty, folks.